It has been uncovered that Peter Thiel, the billionaire, has turned $2,000 into $5 billion tax-free dollars, and the media and the government hate it. Okay, they absolutely are pissed because this guy has had the savvy to use the tax code legitimately in order to create a literal fortune from $2,000. Okay, and instead of doing what the media does, which they grouse about it and they demonize Thiel for using the tax code to his advantage, instead of doing that, we're going to examine what he did. We're going to talk about how you can do the same thing. And then if you listen to this entire video, at the end, we're going to talk about yet another method that you can use to tax advantage yourself. Because, you know, these taxes are going up. We're spending trillions. And if you want to amass money that is not subject to taxation, wait until the end of this video. We're going to go through this whole thing. Now, first of all, I applaud Peter Thiel, okay, because he's given us really a good lesson that we can learn from. I'm going to link to this article that happens to be in Forbes. Now, Forbes is supposed to be all about finance, right? But look at the way they report this. And this is written by Sarah Hansen, and she covers breaking news. Everything's breaking news. So that means she really doesn't have background in finance. At least if she did, I would hope that she would say so in a financial magazine. Maybe that's why she's not, celebrating this and approaching it in such a way that teaches the American people how to do what Peter Thiel has done. Let's get into it. I'm going to link to this article in the description. Peter Thiel has accumulated $5 billion with a B in a tax-free Roth IRA designed to help the middle class save for retirement, according to a new report. Now, in that headline, let's examine that. Never did it say that the Roth IRA is designed to lead you along the path of financial independence. They make a clear distinction here and say, hey, this was designed for people to retire on. And you know how it is in America. You're supposed to retire and be barely able to make ends meet, retiring at less than what you make. What does Peter Thiel think that he's doing, actually using this thing to create billions of dollars in assets? So let's continue. PayPal founder and Silicon Valley mega investor Peter Thiel has $5 billion socked away in a tax-free Roth IRA, according to a new report from ProPublica, part of its ongoing investigation using leaked Internal Revenue Service tax information of the ways the ultra-rich are able to avoid paying taxes and maximize their wealth. Now, ProPublica is leaking IRS information. So somebody is giving ProPublica this information, and that's actually a felony. That's against the law to reveal private tax information. So are we going to talk about that in this article? No, we're not going to talk about that. We're just going to demonize Peter Thiel for using his brains in the tax code to make money. Key facts. A Roth IRA is a special type of investment account designed for retirement. Who's to say Peter Thiel can't retire comfortably off of $5 billion? It allows individuals to contribute already taxed dollars to an account where investments grow untaxed and can be withdrawn tax-free once the account owner reaches retirement age. Forbes reported in 2012 that in 2001, Thiel acquired PayPal shares for his Roth IRA at 30 cents a share and had apparently enjoyed a tax-free gain of $31.5 million when eBay bought out PayPal for $19 a share in 2002. Forbes also reported then that he appeared to have put early Facebook stock in his Roth. So this guy was over at PayPal taking risk, got rewarded with shares of the company at 30 cents. Then he held on to them and had a windfall when eBay came in and bought the company. as I'm sure a lot of other people did as well. Good for them. Then he bought up Facebook early on, okay? Before a lot of us even knew what Facebook was. He took a risk and bought Facebook. Good for him. It goes on. According to ProPublica, Thiel was able to build a $2,000 Roth into a $5 billion tax-free kitty because he used the money in the account from the sale of eBay shares to buy shares of other startups at low prices. So again, he used more risk and was able to garner more reward. Nowhere in this article does it say that he participated in insider trading or anything like that. It simply says he bought low and then he rode it to a gain. After Congress created Roth IRAs in 1997, the Clinton administration, fearful they could become a shelter for the rich, blocked higher income folks from contributing and capped contributions at $2,000 per year. Now watch this. But since Thiel was just starting out, he was apparently eligible to contribute $2,000. ProPublica reports. So what's the problem? Annual contributions to Roth IRAs are now capped at $6,000 or $7,000 for those who are 50 or older. But those who earn too much to contribute directly are able to stuff money in an IRA through what is known as a backdoor Roth. Okay, doesn't say whether or not they can't possibly be committing a crime. The backdoor Roth is apparently also a method by which you can utilize the tax code to put more money into the Roth. And if senators and congressmen don't like that, then what they need to do is legislate something different. They make the laws, right? IRAs were designed, this is a quote, IRAs were designed to provide retirement security to middle-class families, not allowing mega millionaires and billionaires to avoid paying taxes. Well, he wasn't a mega millionaire or billionaire when he was legally eligible to contribute. That's coming from Senate Finance Committee Chair Ron Wyden of Oregon. He vowed to revisit his 2016 proposal that would cap contributions to the Roth IRAs that have reached $5 million in value, according to Bloomberg. Why don't you, Ron Wyden, why don't you sponsor some legislation that makes it possible for school-age children to learn about Roth IRAs, Roth 401ks, insurance policies, other investment accounts? Why don't you legislate some change to the school curriculum so that we can have more Peter Thiels, so we can have more rich people? We're definitely not playing the demonize the rich game on this channel because we want everybody that watches this channel, I don't care if you're an American citizen or abroad, we want everybody on here to have financial independence and to be able to use the rules out there to obtain wealth. All right, let's wrap this thing up. Using retirement accounts as a way to accumulate massive sums of money is nothing new for the ultra wealthy. At the end of 2011, more than 300 taxpayers had IRAs worth more than $25 million each, or a total of $81 billion. Forbes reported back in 2012 that Max Levchin, who co-founded PayPal along with Peter Thiel, sold 3.1 million shares of Yelp through his Roth IRA and netted $10.1 million. He didn't pay income taxes on those gains because taxes for Roth IRAs are paid up front. So no one's avoiding taxes. They're paying the taxes up front and then putting the money in a vehicle created by the U.S. government in order to incentivize you paying us taxes now instead of later. Again, if the United States doesn't like it, why don't they change the law? So I would encourage you to take a look at the Roth IRA, but I want you to also understand, and as I promised in the beginning, there are other vehicles that really are like Roths on steroids. So as the article alluded to, you can put money in the Roth up front, and you can, as you saw, trade within the account. And when I say trade, I don't mean become a day trader. I mean make investments, buy and sell investments within the account. However, that money is not liquid until age 59 and a half because it's a qualified account. So in the event you want to liquidate some of that money, you're going to have to pay a 10% 10% penalty and taxes. Now, not writing off the Roth IRA works well for people, okay? That's real money in Peter Thiel's account. But there's also, and this is something that you should consider for your overall portfolio of how to grow money and to capture economic independence, is the permanent insurance policy. These grow cash value. Now, there are a variety of them. We'll link to some information about those. But they will allow you to enjoy 3 key tax benefits: the ability to grow the money tax-free, access the money tax-free, and also pass on the money to your heirs tax-free. And they're liquid, okay? If you borrow money out of that account from yourself, then you can get your hands on that money, and you can do so without penalty or taxation. So think about those 2 things. Think about that Roth. Think about that permanent insurance policy. Now, you saw also the Roth has a definite limit below $10,000. You can structure a permanent insurance policy so that it has a higher limit, okay? So that there's some flexibility there as well as the liquidity, okay? So I hope you got a lot out of this. I hope you share this with someone, and I definitely hope that you subscribe and like this video. Thanks a lot. I will talk to you soon.